We're going to watch this video called Stock Market Collapse Update. Panic in the market. It's markets in turmoil. Everything's going down, right? But first, what is the market telling us? And we look at what the market is telling us by looking at the master key. So put your stocks in the chat. We'll take a look at those in just a minute. But the master key is going to tell us what the market is doing, as I can't scroll right now. There we go. And we're going to look first at the SPY having the buy and sell signal. We're going to look at the market trend. We're going to look at the market breadth, and we're going to look at some sector breadths as well. And that's going to tell us which direction the market's going. So while we do that, put your stocks in the chat and we will rank them. So let's go take a look first at the buy and sell list that we have over here. So the SPY is currently sitting on a buy signal as of March 28th. And you're probably thinking to yourself, what in the wide world of sports, Chris? Why would this be a buy signal, especially when the market's getting monkey hammered today? Well, the way that I look at it is it would be a buy to close your shorts, right? Essentially, I've been saying this before. I know it's vulgar, but it works. You understand what I'm saying here. It is the time to take off your shorts is what this means. In fact, before yesterday, right? So this update's overnight. The market had been getting less and less fearful, if you can believe that. But sitting on that buy signal right there. Next, market trend. We all know which direction the market's trending, and that is down 4.5%. Nearly, it could push 5%. It could push below both of these order blocks right here. It could be crazy town over here, right? This order block was created in September, and it bounced twice, and now it's very possible that it could blow straight through this. I don't know how far down below we could be looking at this point. 509, right? So how much further would that be? Another 5% drop could be on the table. So far year to date, we're down 12% on the SPY. By the way, we're down year to date 12% on the SPY. How's your portfolio look? How's your portfolio look as an outlier? Mine could be better, but I've only taken 4 trades this year. 50% win rates for me so far, but that's okay. I'm still sitting at basically flat. I'm down 64 basis points on the year, and I have zero stress, absolute zero stress right now. While the market is crashing into the ground, I'm sitting over here in cash and have been in cash for a hot minute with no stress. So the market is clearly bearish, bullish signal, and then market breadth. So market breadth measures the number of stocks on our bull and our buy list and sell list. So our bull list and our bear list. We got 46 new names on the bull list today, including Brixmor Property, including Canadian National Railway, including Every Holdings, and KMB, Kimberly Clark. And then our bear list has 20 new sell signals today, including Osakio Gold Royalties, including Sphere Entertainment, including White Mountain Insurance Group, and Liberty Global PLC Class B. So if we go over to the market breadth, we're measuring how many stocks are on our bull list over here. And we can see that, scroll over just a smidge. There we go. So it had been coming down, and then it came up in the last couple of weeks. And I think that this was a lot of short covering. A lot of short covering was happening, which is exactly what happened right here. A lot of short covering was happening. Then the market breadth started to peak back down a little bit. But as of today, it's actually got a bullish cross back up. This is crazy town. We now have a bullish cross on the market breadth. So we do not have a confluence of signals here, right? A buy signal, bullish market breadth, and a bearish trend. Now, what does that tell you? That tells you that the market is not set up for trading short. The market is not set up for trading long. Are there opportunities you could do either of those? Absolutely. But for me, the way that I trade, I want to say all of this in agreement because it makes life so much easier, right? So much easier. So the market is currently sitting at, and like I say, this gets updated overnight. Let me go back to the SPY, and we're going to look how greedy and how fearful it is. So the market is currently sitting on a fear and greed heat map value of 36. So 36 out of 100. So that puts it within the fear category. We're not in extreme fear yet on the market, but it's going to be very different when we start looking at your stocks for sure. So go ahead and put your stocks in the chat, and let's start ranking them. We're going to rank them from strong sell up to weak buy. Nobody's going to get a strong buy from me because the master key is not set up for anything long. No way, no how. And in fact, we're going to be using this to help us determine if it is or isn't set up for anything. right? Now, the smart buys take signals for opening. This is a new acronym we're going to come up with, a new mnemonic or whatever it's called. I don't remember high school English, but the smart buys take signals for profit. Means market trend, T for trend, S for signal, B for breadth, T for trend, S for signal, F for fear and greed, and then O for order blocks. Now, we're going to start using this a lot. And this is how I look through these trades. This is how I'm coming up with this market ranking, right? I'm not looking for anything other than these 7 things: the market trend, the market signal, the market breadth. We know those are not in confluence right now. Then on the stock itself, we're going to look at the stock trend, the stock signal, and the fear and greed. And then we'll go to the chart and we'll look at the order blocks. This is going to be really useful to you. I'm telling you, the smart buys take signals for opening. Something you can remember. You can remember market signal or market trend, signal breadth, trend, signal, fear and greed, order blocks, trend, signal, breadth, trend, signal, fear and greed, order blocks. All right. So I think that's going to be useful to you. So let's look at your stocks and let's start with, be sure that you put long or short for the stocks you're looking at, like Ranjith. Good to see you, my friend. Ranjith, we're looking at Z short. So Zillow short. Sell signal. The fear and greed is actually looking like it's coming up a bit. It's getting a little bit more greedy. It's not super greedy. It's still at 52 out of 100. So it's actually slightly greedy right there. And if we look on the real estate sector, it's getting a little bit more greedy as well. And then let's go look at the chart for Zillow. See if any order blocks come through. Nope, no order blocks. I am actually not gonna, like, if we apply the same logic here, you've got a sell signal, the stock's trend is down, your fear and greed, however, is getting more bullish, no order blocks in the way. So I would give this a weak sell. Doesn't have everything I need to see. If it had everything I need to see, then I would say strong sell, but a weak sell on this one. So let's look at Tyler, wants to look at BAX short, BAX short. Oh, I forgot. We're also going to look at the new 3.0 results while we do this. So Zillow. Oh no, I have to go down to the Z's. It won't. It's going to find everything with the Z on the way down. Zillow. Okay, so currently over the period that we have analyzed here, the analysis period is 0.25% buy and hold. Outlier signal returns is 53% as they are right now. Outlier 3.0, which is coming later in April, 305%. This is why I am very excited to make sure I show this to you on every stock we look at, with the delta from 53 to 305 being 252 additional percentages. Not bad, not bad. But for Tyler, let's look at BAX and then we'll go to Outlier real quick. So currently, oh man, this is one of the stocks that we had a negative return on, right? It's actually a lot better than buy and hold, down 59%. Outlier current returns are at 30%, but they're going to be up to 19%, which is a 50 percentage point increase, a 50 percentage point improvement from our existing signals. That's not too shabby. So let's go look at BAX for them real quick. So BAX, we're sitting on a sell signal right now, getting less greedy. It's sitting around 59%, 59 on the fear and greed rating, which is right. Put it right there. 59 on the fear and greed going down. The sector is getting worse as well, more fearful. So far, so good. What about our 10, 20, 50? Maybe today it's crossed over. BAX. 10, 20, 50 is definitely crossed over today. It does have an order block down here, but you got some room to it. You got some room. BAX is going to be a strong sell for me. A strong sell. Very strong sell. I like that one. Okay, let's look who else. Hey, Jorge's up 2.5. Way to go. Oh, Just Making Money's up 40% year to date. Awesome. Very cool. Let's see. Jorge wants to look at Coke Long. I mentioned this one earlier. It's like one of the 2 stocks on my list that's actually up today, which is crazy. Let's look at Coke Long. So sitting on a sell signal, the greed peaked around 95, came down quite a lot. Now it's increasing a bit. It's up at 65 right now. So 65 would put it roughly here. So it's in the greed category, getting more greedy. The staple sector getting more greedy as well. And then if we go look at Coke, oh, looks like it's going to close on top of this order block here, which is great. That would be resistance. And if it can close over that point, then who knows how far it can go. So I'm going to give this a neutral. You probably thought I'd say weak buy. The reason I'm going to say neutral is, first off, you're taking a point off because the master key's locked out. Second, we're going to take another point off because it's sitting on a sell signal right here. However, I'll give it slightly green on the neutral. I'll give you that. KS Fresh wants to look at the market, shorting the SPY. All right, let's do this one more time. So the market trend is going down. The SPY has a buy signal. And so let's go to the SPY and do the same data here. So it has a buy signal. It's getting less fearful. It's getting less fearful, the constituents of the S&P 500. But the trend, as you can see, is very down. So I would actually rank this a weak sell. Let's look at, let's see who's got another one. Georgia wants to look at GT short. All right, Georgia, GT is sitting on a buy signal. Even though it's come down a lot, you've got your 10, 20, 50. Looks like they are crossed down. It's getting more fearful. It's getting a little bit less fearful in the discretionary sector. Let's look over here at GT. This is actually crossed up. So yeah, GT for me, that would be a neutral. But let's go. I forgot to look at a few of these. Let's go look at Coke. I just want KO. There we go. So OVTLYR currently has it a 6.99% backtest. OVTLYR 3.0 is going to be at 104% backtest. Can you believe this? Then let's look at GT. Not Target, not that one. I just want GT. No. There it is. Currently sitting at 65. 3.0 is still going to be a little bit, it's still going to be great at 63. So yeah, it's got quite a lot. Actually, I see a question here from Antonio. Chris, hey, that used to be this guy or that guy. You changed your name, Antonio. Chris, I'm taking masters in finance. Hey, I have one of those. And was thinking about making my dissertation on sentiment, quantum trading, and other quantum strats. Is there any way I can contact you or the OVTLYR team? Absolutely. Antonio, shoot us an email over at support@outlier.com. I would love to help you out with that, my friend. I would love to very much so help you out with that. Dude, if I had the resources that you have when I was your age, oh my gosh, I'd have so many more zeros in my bank account. But let me introduce myself real quick. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I can't scroll today. I've been successfully trading since 2009, and this is where OVTLYR is like a safe time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. And real quick, what is OVTLYR and what does it do? Well, OVTLYR shows you if investors are acting irrationally fearful or greedy, and by how much, allowing you to get into the OVTLYR move or get in the stock before the OVTLYR move happens. And if you're ready to save time, make money, and start winning with less risk, you can get the OVTLYR annual pass for 64% off, which is literally 82 cents a day. And if you're already on the monthly plan, it's a one-click upgrade, just like that. So, couple things real quick. Like I say, OVTLYR 3.0 is coming. We're looking at it sometime mid-April. The new charts and new signals will all be coming in all at once, including the OVTLYR blocks, which I'm really excited about. I have been working on the viral sharing contest. Basically, it's going to be a set of things you can do to get points. And for each one of those points, you'll be entered to win. The top prize will be a free year of OVTLYR and $1,000. That is a pretty good top prize, I'd say. The first runner-up will be a swag pack and a book bundle. So I'm going to give you my 5 favorite trading books as well as a bunch of swag from OVTLYR. And then second runner-up will be the book bundle, or maybe the swag pack, or maybe a little of both. So I hope that works for you, right? Now, like I say, this is my style of trading using OVTLYR. It's called the golden ticket trading strategy. And I'm locked out because of the master key. And that's all right. We can still get to today's video. And this video is called Stock Market Collapse Update, Panic in the Market, from our friend Jeremy.
Well, folks, if you ever wanted to see a day when stocks are actually crashing, this is your day. Welcome in, folks. I don't just wake up at 6 a.m. You don't get my ass out of bed at 6 a.m. for no reason. Oh, yeah, baby. We've got drama. We have stocks absolutely collapsing off a cliff here today all over this market. We're talking small companies, mid-sized companies, and we're talking even large companies. Look at Shopify down 15% today. This is a collapse like you would have seen in the great financial crisis. This is a collapse like you would have seen, on some days back in the Rona shutdowns of March of 2020. This is a sort of price action, folks. This is an actual stock crash. When you see stocks like this, when you see Apple go down 8.5% in a day, Apple, and it's not like they reported earnings. This is just on the back of the tariff stuff. Oh my gosh. Okay, so right off the bat in this video, we're going to go through the drama, and it is an absolute drama show out there. Look at the VIX spike in 29% here today. We have a Dow Jones Industrial Average down 1,552 points. We have a NASDAQ down 5%. We have a Russell 2000 small cap stocks. Remember, the Russell's down severely over the past 4 years, and even though it's down 1.5 miles over the past 4 years, it's down even more here today, down 5+%. Insane. Okay. I was up to some stuff this morning. We'll discuss that. Okay. And then after we're done going through all that, then we're going to go ahead and react to this video here today on the reaction channel here, 7-minute video on what's going on here in regards to the whole tariff situation. By the way, I appreciate y'all joining me for a historic day, folks. Yeah. Now you can start saying you've seen stocks actually crash. If you've never seen this before, I've seen.
What I want to hear is him say buy the dip. I want him to explain to me how this AMD was such a great buy all the way down, now under $95 a share. I want him to explain to me how Elf Beauty is doing. It's down 20% today, which is one of his stocks, why it's such a great buy. I want him to explain to me how PayPal, another one of his stocks, is the greatest generational buying opportunity of all time. Please enlighten me, right? And listen, it could be, but you want to buy it when stocks are crashing up rather than when stocks are crashing down. Because I don't know if you know this, but if you're going to buy something at $60 a share, you can probably, I would bet, unless they don't let you do this, but I can't imagine that they wouldn't let you do this. You could buy it at $60 on the way up rather than $60 on the way down. And here's the crazy part. I don't know if you, sarcasm aside, but if you dollar cost average into something on the way down, you're not going to believe this. If you dollar cost average in at the same prices and at the same amounts on the way up, your average is still the same. Your average is still the same if you dollar cost average on the way up or on the way down. But on the way up, you have significantly less risk.
Many days like this. I saw some days in 2022 that were pretty ugly. Although this type of day, even in 2022, is really severe. The last time I could really remember stocks falling off a cliff like this was I think honestly the Rona crash, when because that was the fastest stock market crash we've seen in history, and that's the last time I really saw this level of big companies falling 8, 10, 15%, 20% in a day. Insane. So all I need from you guys, one thing only: smash that like button for me doing this video for you guys and trying to.
I want to look at the comments real quick. Oh, I bet these are brutal. Hang on. Yeah, I don't think he's teaching anybody how to get wealthy right now. Man, I want to see somebody talking about how they were trying to buy the dip, but they ran out of money and the dip keeps on dipping. Man, nobody's getting. All right. No Schadenfreude here, unfortunately.
Keep you informed on everything going on here, letting you know what I'm up to. And if you want to subscribe here to the channel, you can certainly subscribe. We're nearly 90,000 subscribers deep now at this point in time. We're approaching that number, so I appreciate y'all for being here. Okay, so right off the bat, we have Shopify down 15+%. MU, which if you never heard of MU, wow, MU just broke $80.
Oh, let's look at some of his stocks he's talking about. So Shopify, will start there. Shop. Ooh, ouch. So here's the deal. If a stock is already downtrending, moves like this just are a continuation of the trend. I know it's crazy. Chris, what are you talking about? A continuation of the trend? That's not real, bro. Right? Just apply these moving averages to your chart. The 10-period EMA, the 20-period EMA, and the 50-period EMA. Make them whatever color you want. I like blue, black, and red. When the blue line is under the black line and price is under the red line, that is a bearish trend. Now we go over here on this side. When the blue line is above the red line or black line, and then price is above the red line, that's a bullish trend. Now we can do a little red light, green light, right? We don't know until we get the Nancy plan, which Outlier 3.0 feels like it's going to be the Nancy Pelosi plan. But we're looking at this, right? We can't see the future. So we're having to take it one candle at a time. Here, we see the 10, 20, and 50 are all crossed up. And this candle, this big old green one right here, this big old green one right here, this one, this is your green light. Okay. Now, again, we don't know what's happening in the future. Goes. When did it close under the 10? It still hasn't closed under the 10 until right here, till this candle right here. Oh, come on. Give me that. Right there, this candle. That's the first time it closed under that 10 moving average. Now, why do I use the 10 period moving average? This came from my mentor, Steve Burns. This is the indicator of the short-term trend. When price is above it, that means the price today is above the average of the last 10 days. If price is below this, it means it's below the average of the last 10 days. So we can't see into the far right-hand side of the chart just yet, but a close under the 10. Wow. Oh my goodness. Oh my goodness gravy. Now this didn't cross back over. Oh my goodness gravy. Followed by this, right? So from here to here, if you just apply the trend template with red light, green light, you would have saved 34%. 34. The stock can only go down 100%. Okay. It's not like it goes up and it can go up thousands of percent. Stock can only go down 100%. You would have saved 34% getting out under the 10 EMA. And applying the outlier trend template like this would have kept you out of all this hot garbage. Now let's go to the next one. Oh, by the way, wonder how outlier signals would have done with shop. Only 119%. Only 119% in the outlier 3.0. So I think that'll be all right. I think that'll be all right. The next one is MU. Let's go to that one real quick. Not T-Moose, MU. Outlier signals 3.0. That's not so bad. I think 98%. I think 98% will do. I think 98% will do. So let's go look at the MU chart real quick. Okay, let's remove my annotations on here. Again, it was already in a downtrend. It was already in a downtrend. Okay, could you have gotten over here? You maybe made a buck, lost a buck. That's how trend trading goes. But when you're on the right side of the trends, oh my gosh, this has been dead money for months. Look at this. It's basically been sideways since September of last year. That's a stock you don't even want to own. And what gets me is that people buy into these stocks because they had these giant moves up, right? They had these giant moves up before, and then they're like, it has to go up. MU has to go up from here, right? No, bro. Nobody says it has to. And if you bought it on the way down thinking you're such a genius on this side, you just had dead money, literally price unchanged from July of last year, sideways and then down. Give me a break. Give me a break. All right, let's go back to the video here.
Oh my gosh. MU essentially is a massive memory chip giant, okay? And this is a company, I would say, you want to talk about a needs-based company. At the end of the day, if you want to make any sort of electronic related product, right? Any sort of semiconductor, anything, like you need memory. And that's where a company like MU comes in. And there's only a few big companies in the world that really make the level of memory that MU does. Like literally there's probably like one product, there's really like 3 companies in the world that make it, MU being one of them, and the other one, there's really only like 6 main players in the world that make that particular product. So yeah, it's a big deal. And so to see MU down under 80 today, wow. Apple getting absolutely smashed.
MU's now at under 75, by the way. And it doesn't matter what kind of company it is. It really doesn't. It could be the greatest stock in the world, but if the price is going down, if the market's going down, if the trend is going down, you're not going to make money because only price pays. Only price pays. Only price pays. So while it's going down, you can't justify anything. You can come in, you can make YouTube videos, you can do whatever you want to try and pump up that price, right? I mean, 25,000 people have viewed this in the last 4 hours. I would need you to get 25,000 more people to show up for us. I would really appreciate that. 25,000 people have viewed this in the last 4 hours. But they aren't enough. They aren't enough to counter the weight of the market pushing down, and then the weight of the stock pushing down, and the weight of the sector pushing down on anything.
People are still trying to figure out, does Apple get some sort of cutout here where essentially they're allowed to, continue to bring product in the States without having to face these tariffs, even if it is made in India, even if it is made in China, and everybody's still trying to figure out that, right? PayPal getting smashed here today. Look at a stock like PayPal, you'll say, well, how is a stock like PayPal getting hit here today, right? This is just recession worries, right? Listen, like all this stuff about, tariff this, tariff that, like PayPal is not really dealing with that. At the end of the day, and if you want to say it's going to be inflationary, then you can say that's going to.
And this is where I feel like Jeremy is ignorant. And I don't mean ignorant like you're so stupid. I mean ignorant like he doesn't know any better, right? When I talk about looking at which direction the market is going, the market tells you. The market is telling you specifically where it is going. So to look at a stock like PayPal and be like, oh, I can't believe PayPal's hurting so bad. Yeah, PayPal has been hurting bad for months. PayPal has been getting wrecked PayPal has been getting monkey hammered for months. And yet you don't understand how the market works. You clearly don't understand how the market works, my friend. Maybe one day you can watch one of our live streams and learn. But until you do, you're going to be looking at charts like this and be like, what happened? I can't believe this. How is this happening again? How are all of my stocks the ones that are going down? Bro, it's because you're buying the ones in the downtrends. I like money. I don't like watching my money disappear. I like more money. I don't know if Jeremy does.
Make for even bigger transaction volumes to be going through PayPal over time, right? So, but this is just recession worries. Same thing with a stock like Amazon, at 8% hit. Look at Meta, 7%. Now you might wonder, like, why are some of these other stocks getting hit, right? Like even companies that don't make a physical product really, right? Like Meta. And Amazon doesn't make technically physical products. They sell massive amounts of physical products, but they don't actually make them, right? So they don't really have to deal with that. So why are some of these companies down, right? And obviously Apple down huge. What could happen here, at least from the European side, is the Europeans could levy a bunch. By the way, look at that NASDAQ. We just crossed a 17% move down now in the NASDAQ from the recent highs. That's, now we're talking, right? Now we're talking about a good size correction now in the NASDAQ, right? Still not a crash in the NASDAQ, but, if we go a 20% plus number, then.
Let's just go to Meta since he mentioned Meta real quick. Since Georgia brought it up. Thank you, Georgia. Bro. This looks like the market cycle, doesn't it? I love when I see these kind of charts because then I can throw this one up here. Say, this is how the market works. This is how the market works. And these are the people right now who are feeling a lot of anxiety, denial, panic, capitulation, anger. The ones that are holding it. Holy smokes. This ain't no jocus. Yeah. It's crazy. And I listen, I don't want these bad things to happen to him. What I want to do is stop bad things from happening to you. What I want to do is make sure that the 25,000 people who have watched this video so far already figure out that maybe Jeremy doesn't know what he's talking about. At the end of the day, if I can convince you of that, and then the other 24,999 people who have watched this so far, then they're going in the right direction. You don't have to buy OVTLYR, but you do have to be market aware. You do have to understand that the market will push everything down, and it doesn't matter if they make a physical product or not.
We can start talking about crash. But basically what Europe could do is they could start levying some sort of additional tax on all digital services. And so, they could hit Apple with that. They could hit Meta with that, Google, those sorts of companies. So that's a potential, right? That's out there. Now, if you look at something like an AMD, on a day like today, with how ugly the NASDAQ is, with how ugly the Dow Jones Industrial Average is, with how ugly the S&P 500 is, with the VIX spiking the way it is, let me be very crystal clear about AMD. This is a win.
Oh my gosh. Did he really just say that? Clip this one. Put that in. Oh man. I'm so glad that we put on this video today. This is a win. AMD is down 8.5%. AMD is down 8.5%. The market's getting destroyed and your stock down 8.5%. This is a win. Oh man. This is the end for Jeremy here. He may not have any money left in his account by the end of the day.
Something like an AMD, on a day like today, with how ugly the NASDAQ is, with how ugly the Dow Jones Industrial Average is, with how ugly the S&P 500 is, with the VIX spiking the way it is, let me be very crystal clear about AMD. This is a win.
Holy cow. I'm Batman. He's the Joker. Good gravy. We need to save this video. This is one of those times where you got to come back and be like, did you actually say that?
This is a huge win for AMD. The fact that that stock is only down 4% on today's action, a day when you got Apple down 8+%, this is actually a win. A day when Shopify is down 15%, a day when MU is down over 10%. This, folks, is a huge win for AMD, down 4% here today. But also remember, AMD.
Well, I mean, I don't know when you recorded it clearly, but it's down nearly 9% at the moment. This is a win. Let me make this crystal clear. Oh, wait. This isn't the biggest loser. Oh my gosh. Let me make this crystal clear. This is not a win. This is a stock that's been bleeding in a stage 4 downtrend for months. There's no win here, my friend. Not even close. It's been, in that case, it's been winning for months now. Very well said, Arthur. In that case, it's winning for months.
AMD got hit, very hard before all this, right? Same thing with Nvidia. Nvidia being down a little less than 5%. Let's be very clear. Like, that's a win for Nvidia, a big win for Nvidia there. Right?
Hang on. Let's look at the OVTLYR 3.0 results for AMD and Nvidia since you brought them up. AMD. How about 163% using OVTLYR signals for OVTLYR 3.0? What about Nvidia? There we go. Nvidia. How about 1,352% following the OVTLYR buy and sell signals for Nvidia? I don't know. That seems like it's okay to me.
Right. No,
I would say that those are bigger wins than what he's having right now. I would say that those are a bit bigger of the wins than he's having. But I could be wrong. I mean, I'm sure he's making way more money than I am on AMD. Well, I you know what? I bet that he's not, because I have no exposure in AMD, and I would not have any exposure in AMD. And anybody who's had AMD exposure, they have a lot less exposure than they used to have.
I want to show you my stocks here today, because I got some ones that are getting slammed. Revolve, e-commerce company. A lot of their products are made overseas. There's no debating that, right? And that stock getting absolutely obliterated here today, down 17%. Now, to be fair, is Revolve a buy today? Absolutely Revolve's a buy. Like, they'll make it through this mess. They have one of the strongest balance sheets you'll ever find from a small cap company. And, at the end of the day, like, they'll get through this whole tariff mess and out to the other side. Negotiations will happen. Like, they'll figure things out. And next thing you know, they'll be out to the other side. So Revolve's a tremendous buy today. Not a stock I bought.
He just said, what stock is a tremendous buy today?
Things out. And next thing you know, they'll be out to the other side. So Revolve's a tremendous buy today. Not a.
No. RVLV. Good freaking goodness. I don't know this stock. I've never even heard of this stock. But this stock is in a stage 4 downtrend like nobody's business. Let's pull over here. Stage 1. Here we go. Gotta zoom out just a smidge. Stage 1, stage 2, stage 3, stage 4. And then it's down 16% today. What a great buying opportunity. So I like to use this real estate analogy. Right? So this stock, right? Imagine on this side, a few years ago, you're looking to move to a new neighborhood, right? Maybe you're moving states, maybe you're moving to the great state of Texas like everybody else is, and you finally wised up and you're coming over here to join us. And you're looking at a couple towns and you're like, oh, look at that. Yeah, they're building a Home Depot there. Oh, they just put in a Starbucks. Oh, that's so nice. Oh, look at this. And then their high school's building a new stadium. Wow, they must be doing really well. Oh, look, they had a couple fast food restaurants and now they're putting in a Texas Roadhouse. Oh, now we're really increasing. Now we're really getting better here, right? That's on its way up. On the other end, right? A few years go by, a few more crime starts happening, right? Maybe the Joker moved into your town and starts turning into Gotham City. And, criminals all around the corner, murder rates spike up. There's crack dealers on the corner, and you're looking at the same house. When it was on the rise up versus the same house on the rise down. And your real estate agent takes you over there and she's like, hang on. First, she kicks in the door just to make sure nobody's in there. And she comes with heat, right? She's looking around. She's like, okay, I think it's good. Because that used to be known as the trap house. It used to be known as the trap house. And you're telling me that that is a thing that you're excited and wants to buy? No. No, 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 no. Both of these things are assets, right? If your home value is going up, you're in a great neighborhood, everything's going awesome. The city you're moving to is expanding. It's awesome. It's a great place to be. If your stock, the price is rising, everybody wants to own it. People want a share of this pie here. Your stock turns into, or your house becomes the trap house around the corner, and you're like, we don't go on that neighborhood anymore. Versus, your stock looking like this. It's the same concept, right? We're looking at two different assets, but you can still evaluate them in the same manner. For me, I want to be looking at stocks that are going up. And I cannot imagine anybody looking at a stock like this and saying, this is a great buying opportunity. This is just outright deception. This is just painful. This is awful. This is horrible. And that's exactly why I picked this video.
Stock I bought so far today, but I wouldn't mind buying some Revolve shares at 18. It's been a while since you've seen Revolve at 18, right? Speaking about stocks, it's been a long time since you've seen it. Elf. Elf at 57? You'll be flipping my flapjacks. Elf at 57? I mean, we're talking it's been years since Elf's been 57. Years.
Okay. And this is the huge flaw. This is the giant flaw. This is the tremendously enormous flaw in people who look at stocks like this. Okay, you ready? 57 happened. Let me make this bigger. 57 happened in 2023. $57 happened in 2023. And then it had its move up. It had its heyday. It had its peak. And now it's in its stage 4 downtrend. It had its stage 2 move. This already happened. And now you're looking at it on the other end saying, oh yeah, it's definitely going up from here. Oh yeah, it's a buying opportunity because when I buy it, it has to go up from here, right? This is not like going and buying something off the shelf at retail, right? This is not like buying Pokemon cards at GameStop and then going on eBay and flipping them. The market doesn't work like that. The market is telling you nobody wants this stock. They did when it was crashing up through $56, not when it's crashing down through $56. Do you see the difference here? Type the word up in the chat if you see the difference here. If you can see the difference in why you buy a stock when it's crashing up through a price versus when you buy the stock when it's crashing down through a price, type the word up in the chat. Yeah, exactly, Patrick. ELF looks exactly like the market cycle. Because it is. Because this is real, right? This is not myth. This is not legend. This is not hearsay. This is what happens in the market. Yeah, everybody's saying up because you get it. Man, is this so interesting? This is why I pick these videos because, honestly, I don't want him to lose money. But more than that, I don't want him telling you to go out and lose money. That's why I pick these videos.
Years. And you think about, all the progress that company has made over the years, right? Tremendous progress. I'll pull it up here for you guys, and we'll look at a good old Elf on a shelf, and you'll get to see.
Yeah, it did make a ton of progress, but it ain't making progress right now, my friend. Ain't no progress we made.
See just how beautiful this company really is. Stock price is absolutely in the dumpers, but look at this. And you know what? The funniest thing about this whole
what is that? Trailing 12 months revenue. Okay. Their revenue's increasing. That's cool. Good for them. But their share price isn't. Their stock price isn't. And if you're an investor and this is going up, I mean, that could help you feel better about it, but you're not going to get paid. You're not getting paid at all.
Else situation is in regards to tariffs. And I've explained this from the beginning, but unfortunately, Wall Street's not too intelligent. We know that, right? They sell out at the worst times. There was Wall Streeters selling me Meta stock in 2022 at $88.94. These guys are clueless on what they're doing, completely clueless. And that's what happens when you have no real education in how to actually properly invest in the market. And, you just start a fund and you go through the Ivy League schools and, everybody just gives you, hundreds of millions of dollars and billions of dollars to invest, without much proof of you actually being able to run money over time. So they make the dumbest decisions, and selling off ELF today is the dumbest decision they could make. Because at the end of the day,
I feel like he lives in Bagholder Village. I don't know where his average price is on ELF, but I'll tell you, he's probably not making money on it. And being down 20%, that'd be flipping my flapjacks. God, this guy, the arrogance to go with it. The arrogance to say just how smart he is versus everybody else in the world. Give me a freaking break. Yeah, the pot calling the kettle black right there.
Day, the tariff stuff's going to be here and then gone. And at the end of the day, ELF's going to remain and be bigger than ever and more successful than ever. And guess who can mitigate these tariff costs as well as anybody? It's ELF. They already have a whole action plan. If these Wall Streeters like would stop having steak dinners for once and actually listen to a conference call, which they don't do, if they actually listen, the only ones that actually listen to a conference call are individual investors, right? Maybe a very select few, like top hedge fund guys and like analysts.
No, that doesn't matter. Let's move on. I want to see any other stocks that he has to talk about.
At a 10-year discount?
Oh, God. Nike. Wow. Nike, 14% down today. Remove this. 14% down today. Yikes. Oh, man. Okay, so this is what he was talking about. Yes, a 10-year discount. Hang on. Like, it's so many candles, my computer is not able to keep up with it. Let's go to the weeklies. Current price is, see if I can make this easy to see. Current price is right here. Holy moly. You're telling me that's a stock you want to own? Oh, it hasn't been in this price since 2017. He was saying, buy and don't stop buying for Nike. Why? Why? This is a disservice to everybody who tunes in his videos, and I don't understand why they do. I just don't. But I am really, really grateful that you are watching this. So listen, I don't want to watch any more of his videos. What I want you to do is go tell somebody about the OVTLYR channel, right? Don't pay us a red cent. Go tell somebody about the OVTLYR channel, because we are doing our very best to help you save time, make money, and start winning with less risk. And you're not doing that. You're not doing that at all by following what Jeremy has to say. So, of course, be sure to tell me what you're trading in the chat. And if you're an influencer of any size, we want to work with you. Send us an email over at support@outlier.com and come back tomorrow, where outliers like us will save time, make money, and start winning less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of them. I also recommend you don't go to Bagholder Village. We'll talk soon.